There it is. Record to the cloud. All right, so in case you don't want to be recorded, you won't really be recorded because I don't have your names or anything on the screen, but I am recording this. All right, I'm going to go ahead and start. So thanks for joining. As I mentioned, I expect a small audience today. I wanted to do a update on workflow. I believe we pushed version 23 out to everybody this weekend. There's a lot of upgrades in that one, and I hope you're seeing the speed improvement. Um, we had to pull off the relative strength ranking. That'll be back soon. Something was slowing things down, and when we isolated it, was in the relative strength ranking. And since it's not a primary part of what I do, I thought it was okay to pull it. So again, thanks for joining. Jeffrey here. All my stuff is on the lower right. And so we're going to, not necessarily in the order listed, I'm going to go through my workflow. I'm going to answer whatever questions you have. But I want to start by talking about how I traded GEV. And the reason for that is I met a bunch of people today not today, this weekend at a meeting, a VectorVest meeting, and they looked at me like they had no idea when I said broken wing butterflies. So I want to talk about it because to me, the GEV stock is one of the best for broken wings, but I don't just set it and forget it. So I thought I'd review it. So again, this is just to review things. I'm not going to go through teaching everything about top down, but I'll respond to any questions. We're going to look at every one of the layouts and we'll go from there. Anyone make comment about VectorVest? Um, I think I figured out why VectorVest is so popular. And and I've had VectorVest since the DOS days. So this is definitely not a dissing VectorVest discussion. And it's because of their level of education support. And I've always wondered why they have so many people. I mean, they sold out a live meeting in Tampa this weekend. They probably had 150 people, if not more, in the room. Nobody, Rob gets that on his Well 365 events, but that's a lot of live people who paid to travel and then paid for hotels and stuff. But they do a lot of education, so I have to give them credit. But let's go ahead and let's take a look at what we got. So as always, it's for education purposes only. This video, again, is to show you how I use the tools. Obviously, trading involves risk, and you're solely responsible for any decisions you make. I'm going to talk about options, so I definitely want to say that trading stocks and options can be considered risky. Always consult with your financial advisors. I'm going to discuss one option trade. It's the broken wing butterfly. You got to know your risk before trading, and if you haven't been trained to do options, it's very difficult to start with what I do. You need to get basic training. Now, I also am the guy that doesn't think that options are that hard. And unlike stocks, options are trades that you can actually define your risk going in, and it's the one type of trade that gaps don't kill you because you've already fixed what your exit price is. But obviously, everybody in the world talks about how risky they are, and that's because we're human beings and we have a tendency to do things that are naked, meaning short, and too big of a size, and then we get hurt. So you have to learn. And for those that see this, whether they're, most people that are alive today know me, but I've been doing these videos forever. And the funny thing is, here's an example of forever. This is me when I started doing them, and this is me as a grandpa. There's 20 plus years between pictures, probably close to 30. And for those that know Ian, they know very well what he used to say. And he's not a guru. His job is to teach you to be your own guru, and that's always how I try and do this. I mean, I've been fortunate in life in many ways. I've learned from smart people. It took me a while to get comfortable where I am in the markets. Um, but I think the best thing is to learn it yourself. And, the number of people, physician friends that I know in Florida that I hang out with that, oh, tell me what to buy. It's really the wrong way to approach it. And I think all of you here are part of the Google group, but for those that aren't here, it's how I communicate. I don't keep a mailing list. I am not a marketer. I am not going to sell you anything today. I just would want to make sure you get value out of the tools and help you. But if you're not part of the Google group, um, it's free. It's again, I use it as a mailing list. I don't spam anybody. And every night when I do a video, because that's all over the place time wise, because I don't know where I'm going to be geographically either. I like to set something out to show you, to let people know I just did something. Now, last year, we're never going to see this one probably again. It was a pretty good year. I finished up 180%. But I put this here not just to talk about the past, but I've been, I made comments on Thursday's video that I was going to, instead of roll some of the options that I typically roll forward, I was going to raise cash on Friday, and I did. It may turn out to be fresh powder for me to deploy on Monday, or I may be happy that I did. But if I look at right now, net cash that I have, and I look at protected positions, and I've got, for example, if I own Bank of America and I have a $52 put on it, a $57 put, because I bought a put when it was about 57.50, and it's at $52, my risk on Bank of America is zero. All right, because if it was to drop before expiration on that option, I could sell it for 57. Actually, it's 57.50. So I don't count that as cash, but I count that as a protected position, which is basically the same as cash. And the reason why I did that is I'm nervous about the market. We'll look through and I'll talk about why. And I also remember last year, and even though I had a great year, I popped in January and then I sold off. And I know during February I hit my lows. All right, I didn't hit my lows, I went negative. And then that bottom that I called on April 7th led to a big run in the market. This year's tougher. I mean, I'm happy where I'm at. I'm up 12.3% in what is a very difficult 7 weeks. And, I'll take 6% per month return. I think it's going to be hard to get that this year. But, what I do still works. I just am less confident right now and therefore much more willing to have cash in the account because when the cash goes away, um, is not when I make money. I like to have cash so I can buy fresh merchandise. Speaking of merchandise, this is one of my favorite stocks. And, I think back to the great financial crisis, and I had a bunch of GE, and GE just got clobbered. The financial part of GE got clobbered, the industrial parts, and then all of a sudden now GE splits out into GE Vernova, GE Healthcare. And I just kind of wish I had kept all those shares that I had and just pinched my nose and closed my eyes because some of these offshoots have done extremely well. So GE Vernova to me is their energy group. It does engines, I believe, wind farms, and they are very involved in the data center story. Um, Both Praveen and I have been trading this thing a lot because, well, it has a tendency when it touches the 50-day moving average to do this. And I don't like buying it before earnings because let me back up. I thought about buying it before earnings, but after last week and seeing what happened when you have missed earnings or you make your earnings, but you piss somebody off in your commentary and your stock plummets, I decided to wait until GE's earnings came out. In fact, before I even move forward, let me just pull up. I couldn't figure out how to take a snapshot of this because every time I took a snapshot of the earnings disappeared. But you could see earnings came out on the 28th, and to say the earnings were crazy, uh, they their earnings growth was 673%. The surprise was 357%, and they had more modest beats on revenue. I don't know the last time I've ever seen a stock have a 357% earnings surprise when the stock is a $600, $700 stock and $13 worth of earnings. My God. Now, next quarter, it's $1.80 projected versus 91. So it's a double. So it's not horrible, but it's a lot less. But if it has a big surprise, who knows where it will be. Now, I will tell you that pre-market, this thing was about 700, I think, when it went into earnings. And this is the earnings. This is the day I bought it on right here. Um, it dropped $20 pre-market, and so you can't buy options pre-market. But so maybe I should have bought the stock. But how much stock can anybody buy that's $700 a share? So I put in a butterfly order and I got filled. And I just want to show you what happened with that butterfly. So it's a perfect setup. You can almost argue kind of a cup, maybe another cup and a handle and a breakout. Great earnings. So what I did is I bought a butterfly. And those that have watched my training before know that I hate regular butterflies. This is a wide butterfly, meaning that there's a lot of space here, and a typical butterfly is even thinner. But the idea that you could pick the right stock, the right direction, the right time frame, and the price goes all the way up to here and you get a loss, I can't stomach that. But I like this picture here because in the broken wing butterfly, I can still have a big gain, but at some point I fix my gain here, and no matter how high the price goes, I still have a gain. I love this trade. Why do I love this trade? Because I'm buying one either at or in the money, at the money, or a strike or two in the money. If you buy a call in the money, you are paying some intrinsic value of how much in the money you are, but you're not paying a ton of time value. Then I sell two calls that are out of the money, which have no intrinsic value, but have substantial time value. And then I buy one call further out to protect myself in case the stock goes to the moon and that short, it's really, I have a long call spread and then I have a short call spread. And I don't want to be short a call on something I'm very bullish on. Therefore, there's a spread. I don't wait until expiration. I actively manage them. So I wanted to show you what I did on GE Vernova. So these are the trades I took, and I don't expect you could see them. So I've highlighted them here. I opened the trade, and the stock was trading, I think, about 710 when I opened the trade on January 28th. And I did a broken wing butterfly, bought 15 calls, sold 30 calls, and bought 15. That gives you this picture. If you look at the strikes, I had a potential $60 return on the long call spread and a minus $20 return on the short call spread. So worst case scenario or best case scenario, if I did nothing, is I would have paid $22.50 for the spread, and I would have kept $40 at exit if I didn't manage the trade and I finished above $780. Now I like to get 3-to-1 on a butterfly, but I wasn't going to get it on this one, so I was happy. So I put out 33,000. Now GEV really did well after these earnings came out. So let me go back to where January 28th was in here. And you can see GEV has run up since it came out on earnings. Now, I've capped my gains unless I manage this trade. And that's what I wanted to show you because we don't really talk about that usually. So 2 days later, I said, this thing's going to go to the moon and I bet it's going to take out my short call, which has a cost to me of minus 20 on the trade. So why don't I just close out that short call? So for $8.15, I was able to close the short call spread. That would leave me now with just a long spread of 700 and 760. That cost me $12,225. So now you could see the bad news here is I just paid more money for this trade. And where it gets really ugly is if I was wrong and this trade went and dropped below 700 because I now got more invested in the spread. Then fast forward, the 31st was a Sunday, so on Tuesday the 2nd, or was it 31st Saturday, Monday the 2nd, the stock is up more. And I said, I don't want to be limited by that 760. So what I did is, and right, remember I sold 15, so I've got 15 minus at 760. Why don't I buy 15 at 760, sell 30 at 780, and then buy 15 at 790? So what I've done is I've now taken that short position and I pushed it up to 290, and I have I'll show you what the trade looks like in a few minutes. So I'm left with a new spread that is 760, 700, 780, and 790. Okay. And I'm minus 30 at 780. So I've got 10 at risk, and I've now got between 700 and 780, which is 80. So I pushed up my max gain to $70 per spread. And then I decided on the 3rd, you know what, this thing keeps going up. I can take back some of this $10 of downstream risk for $5. And then a week later, I said, you know what, I'm going to do that again. I'm going to take the rest of that minus $10 out, and I'm going to leave myself with just the 700 long at 15 of these calls and short 15 at the 90s. Okay. And what I ended up doing, actually, not the 90s, at the 80s. And then I closed it on the 17th, and I gave up $1.50 a share. So I gave up, or $3 a share. I could have made more money, but I decided not to be a schnorr, and I closed it for $115,500. So if I walk through the trade, I started with 15 minus 30 and 15. Then I sold the short call spread, and now I have just a plain long vertical, 15 and minus 15. Then I decided I wanted to make the 760 go away and push the 780 up to 90. So I was able to buy a spread here. Um, actually, and so what I ended up with was 15 at the 700, minus 30 at 780, and 15 long at 790. And then I wanted to get rid of this short, because the 15 short. So over 2 different trades, I took those away so that by the time I got to the 17th, I was left with 15 and minus 15. And if you look at, and I call this a campaign, again, I don't sit there and ignore it. I ended up profiting 51,985 in 20 days. Had I held it to expiration, I gave up a little bit of money. It would have been 56,985. Now, what if I had just left the butterfly alone and had it manage the butterfly? Then I would have paid 33,750 and got to keep 60,000, got paid 60,000, and would have only had a net of 26,250. So there's nothing wrong. I would have been very happy if I kept that to expiration and I won and I got 26,250. But with the point that I wanted to make with this is I'm not a passive guy. And I basically wanted to roll that short call up a little bit and take out the downstream short call spread because I had conviction that I was going higher. So that's how I manage these trades. It's a big mover. I've owned it multiple times in the past, as has Praveen. I bought it post earnings. I couldn't believe when it traded down after those earnings came out. And then it rallied. It's expensive stock, so even a call at the money call was probably $20+ a share. So I wanted to do an option spread, and I liked the broken wing. I had a benefit. There was a smile in volatility, and what that means is there was less volatility at the money, and because during earnings the volatility on the outside calls goes up a lot. The volatility hadn't come down all the way, so there was more volatility on the short calls than the call at the money, which made them more relatively expensive. I actively managed the trade. I sold the week of expiration to avoid volatility. I gave up money. Nothing's worse than watching the trade be max trade and not selling it and giving back a little bit of money and then watching your stock drop 20% because of a Trump tariff or something. And because this is a big mover and the market's volatile, I went with a relatively short time frame. I could have gone longer, but if the stock moves, I want to put on a new spread. And oh, by the way, no one says you can't put on a second butterfly in parallel. But that's how I manage the broken wing. I want to reduce my cost going in. I want to totally understand what my maximum loss is. And then I want to manage the trade going forward. So instead of netting out 90,000, I netted out, or excuse me, 60,000 times 15 or 90,000. Um, Actually, this would have been 40, my bad. 60 minus 20 is 40. Netting out 60,000, I was able to net out 115,000, and I was able to take my profit from what would have been max at 26,250 to 51,985. So that's a broken wing, how I play it out to the end. And you don't need to see the rest of that. I just wanted to start with my disclaimer slides and the broken wing butterfly story. So now I'm going to jump into the workflow review. So I'm going to show you the exact things that I do every night. If I'm not talking much, which won't be the case today, this is all about me talking. But if I'm not talking much, I can really be done in 20 to 30 minutes, and that's really my goal. I don't, my wife wants some of my time, and when my granddaughter's here, it's not that I don't love my grandson, but he lives hundreds of miles away where it snows, and my daughter lives around the corner, so my granddaughter's here all the time. But they don't want me on the computer. So I always open up with the daily briefing. And one thing that I do before I do my videos is I always go and I'm going to make it look and I always rank them by 1 day close. And then I don't like how this formats. And Praveen is trying to find a fix or an alternative tool. So I always do a best fit. Now it's already in the best fit mode, so you don't see the improvement. But by doing the best fit, and then I'll pull down so I don't lose any of them, to me it's much more visually appealing. And I always look at Bitcoin, which, I kind of think if Bitcoin is actually rallying, it's probably going to help the markets. And you could see over the last 5 days, Bitcoin, which has been horrible, is up 3.7. I look at the Q, Spiders, Diamonds, and Russell. I look at where they finished in their range. Obviously, finishing higher is better than finishing lower. You have the highs and lows. We can rank it by, you see how the formatting changed? I don't like that at all. Here you can look at their 5 day change and see that the Russell led on the week. So, and this will update during the day. Remember, you have to click this and the time frame to update. It's pretty quick. The 52-week or 12-month new highs, new lows. As I say on the videos, new highs in the market are not built upon new lows. They're built upon new highs on stocks. So I like to see this above 100, and it's still negative on the NASDAQ. And that's one thing I call out a lot is how we have different markets here. They're not all behaving. I think this percent advance is an important tool and one that I'm checking out a lot during the day, especially if it's divergent. And by divergent, I mean if the market's down and the percentage of advances is going higher, that's a pretty bullish sign. If the market's up and the percentage of advancers is reducing, that's obviously not a bullish sign. I don't pay that much attention during the day to the sectors and industry groups, but I do think it's important. And obviously, Friday was a really strong day. I think Mike Webster called it he had a word for it, but a phantom follow through day. It didn't make it as a follow through day because the NASDAQ was only up 0.9%. But I think a lot of people want to see a follow through day so they can start playing to the long side. So I think it's important, and you got current day versus prior day. So it was a strong day all around. And then I'll come up here. Remember, these ETFs are S&P 500 sectors, and we have a lot more than 500 stocks in our product here. So you have to know what you're looking at. And obviously, and I've got it ranked again by 1 day change, and I got to put the percent fit in, kind of do it reflexively, and you could see that communications, discretionary, real estate were up, healthcare and energy to the downside. Some maybe 5 days on the weekends more important to look at. And again, I'll just do the best fit. There has to be a way for it to default to best fit. And you could see here how on the week Staples was the weakest. And if we want to believe the market's going higher and all the things going on don't matter, it's Staples being down is a good thing. Tell you, it's interesting. I'm just looking at the hockey game in the background. It's kind of cool. They're taking their team picture. A couple guys brought their little kids on, and then there's a guy named Johnny Gaudreau who got killed in a car wreck, motorcycle wreck. Must have been a well-loved player. He was playing, and they actually have his jersey out with the team. That's kind of a chilling thing if you follow hockey. And then I like to look at the themes, and silver and gold were back. Silver still got a long ways to go to get back, but we can see over 5 days, over 1 day, what themes. I think those are important. I think they're very important during the day to look at what's actually working, what's not working. So this gives me a nice snapshot. And if I was working at home where I have multiple screens and I'm not working in a fishbowl, and if you come to if you're ever in my office, you'll see that I'm a corner office. So I've got glass on 2 sides, one overlooking the water, and then one looking north on the water. But the inner horizontal long wall is on a hallway, and my admin sits across from me, and it's glass, and it's a corner, so everybody goes through that corner constantly. And if somebody sees, if I'm having a bunch of monitors up and I'm trading stocks, everybody's going to see it. I can't do that as a boss. So I really don't. But if I'm at home, I keep this up on one of my screens. I always start there. And to me, it's very useful. Nothing has changed here. If you have themes that I don't have and themes you'd like to add, let me know because I think we have the ability, probably put in as many as we want. And one of the things that Praveen and I have talked about is to give you the ability to put your own themes and your own daily performance pieces up here. The other thing that I've asked Praveen to do is I don't really know if I care about 1, 3, and 6 months, but I might care about what it was like a day ago and a week ago to see if the trend of these are getting higher or lower. So that's on the punch list to get added to. Any questions on this sheet? Just type in anything if you got them. And type in any questions or comments as we go. Again, I'm not anticipating giving you a lot of new information except for features today. I'm going to go to the timing brief. We've had a bug that I don't know if it's fixed yet. And the bug is when you change the time frames, we've had the label ghost on us. And of course, it's not doing it now. I know that Praveen has been working on that. It's aesthetically not great, but it doesn't impact on anything. So remember the buy sell line is green. And those of you who used to go to Ian's meetings, remember when we did the bongo years ago? And all I've done here is I've combined the bongo with the 30 WMA, which I took from Weinstein, and created a timing model. And as when I teach people that don't know anything about Ian or anything like that, the bottom line is I want something that doesn't flip flop all the time. And by filtering the bongo, which in itself is a good trending indicator with a moving average, it reduces the flip flops. And that's, I always look at the weekly first because if the weekly is positive, then that's the direction of the market in my mind. The monthly's probably too long to be meaningful, but if the monthly starts to go red, we know we're in trouble. Nothing's red on the monthly, and the Qs are red on the weekly. But look how close they are to the WMA. But you've got to both get above that and flip your bongo. So I'll be very happy if the Qs go before I lose something. And intra week, had you looked at the weekly chart, we were at big risk of losing the spider. And you could see this little leg here underneath the body. When that was below the yellow line, we had a red bar here. And the thing about weekly bars is you don't care about them until the week's over. So I didn't really make a big deal. And then the daily is going to get my conviction. And unfortunately, we still have 3 negative on the daily, although the weekly flipped. And we are above the WMA on the IWM and the diamond. So I think we're better shape right now than we were a week ago. And if it wasn't for the fact that the president, who I am not anti, so this is not, I'm not a lefty saying bad things about the president. I don't know why he couldn't have left well enough alone and why he needed to decide after hours that 10% wasn't enough and he had to increase it to 15%. So I have no idea what the futures are going to do. Hopefully they're just going to ignore it like they ignored the 10, because had he not done that, I think this market was going to break out of this funk to the upside. Now I don't know. I mean, you think about Friday, the the GDP was softer than we thought. Now you can blame it on the shutdown, but it was a lot softer than what we thought. And the PCE wasn't bad, but it was hotter than we thought. The employment data is not great. We've still got to deal with the fact that every time the yield curve corrects from an inversion, you get a recession. And then we get the best news of the week if you're long, which is the tariffs go away, and immediately comes back with a 10%. I think we had all the ingredients at that point for the market to give up, and we closed really strong. Look at where we closed on the spiders and the Qs. The only thing that had a weak close was the Russell. So it'll be interesting to see where we end up on Monday. Again, this will update during the day. Remember, you can bring anything up by making sure it's highlighted with the white bar. Click on it, and it'll go full screen and go out of full screen. I believe you can now draw on this, and you can put indicators on this. Yeah, let me take that off. I want to leave this thing as uncluttered as I can because it's really about one thing, it's timing. So I'm going to hope that you write questions when you have them, and I won't keep asking you. But if you have anything that you want me to explain, this is the time. And there's no question that's dumb, because assume other people have the same question that aren't here to ask. So to me, this is not, I'll take credit for this because I was involved in the bongo and I did a lot of studying of different moving averages, and I'm pretty comfortable with the 30 period WMA. And I think this is good. And again, the daily is my conviction, the weekly is market direction. Guppy charts. There's not much here. So I'm just going to talk about why I like them when, and we will, get a big market correction at some point. I've learned a lot historically, and I've learned that when we are, I can go to a daily maybe, actually do both. When we're below these moving averages, I do not want to be in the market. And when we're getting inside this band of moving averages, I probably want to be very less active than normal. But when we are riding above these moving averages, I don't even want to think about the market going down. And for the longest time, we were riding in a really nice area. It's changed here. It's changed here. And if you look at the other indexes, it's changed across, except for, well, here's the RSP, and isn't this interesting? The equal weighted spiders are doing better. The equal weighted Qs not, but it's still only 100 stocks, so I'm not sure the equal weights really are that different. And the Russell and the diamonds are fine. As long as we're doing well, I don't pay much attention on this one. It's really understanding how much damage control I need to be doing. And when you're below those moving averages, nothing good happens. The index ETFs, I think these are pretty self-explanatory, but again, highlight the one you want, open it up. Let me just talk about the seasonality because I get a lot of questions about that. And I really think the seasonality is good to have. And, Vantage Point, which is, I don't consider it a competitor because I don't know if anybody besides me actually owns it. But they charge you by the sector. Imagine buying a trading platform and then you got to pay extra for every sector. So by the time you have everything, unless you go to one of their live meetings when they give special deals, you still probably have $25,000 invested. And the reason why they charge that much, in my opinion, is because they call it AI. They've been doing the same thing for 20 years, so I'm not saying anything. They were just before their time. But they look at comparator things that relate to the instrument you're looking at, and they look at what the comparator things that are doing to predict what your instrument's going to do. So there's probably a reason why they're still here. I don't know. But anyways, how do you draw the seasonality? So if you look with the gear, you can see that up here, you can define your moving averages. How do you get the moving averages in? You go to the indicators and you double click on what you want. And then I double click 3 times on seasonality. So I have 3 different seasonalities in here. And I'll go through everything in a second. And when you do the seasonality, you can pick 5-year, 10, 15, 20, 25, or all. And you can either start it from the beginning of the year or today. The beginning of the year is interesting, but it starts to map a curve that doesn't look anything like today. Versus if you started it today, you show where it's projecting that it's going. So after playing with it, I've become a fan of today, and so I could probably do better on my color selection. But I use a 10, I use an all, and I use a 5. So that gives me short term, little longer term, and all time. And it was interesting that on the spider here, the short terms and the green, I think, which one is, well, doesn't matter. think the green's 5. But the 5 and the 10 were trading down, but the long term was just going straight up. So shorter, more recent days, we've had trouble in February. Longer term, it wasn't an issue. On the moving averages, I set them up here. I always have a 1750 and 200. When people ask me why, Pat knows why. That's what Ian used. I got no other reason for that. But Ian, if Ian used it, it's good enough for me. This thing here, change percent in previous close. I'll show you where to find it, but it puts the price change up here. I already talked about the seasonality, and then I added a 21-day exponential. Why do I have the 21-day exponential? Because Webster likes it, and I like Mike Webster, and I think that he's a hoot. The way he dresses, his hair, how he loves the rock and roll. But boy, is he smart when it comes to trading, and did he spend a lot of times with O'Neill learning. And then I added the 100-day because I noticed it was becoming important. So all of these are the indicators that I've added. And then you can change the colors down here. And when I look at anything, if I highlight the price, and then you look in the upper left-hand corner, you can see the open, high, low, and close. You can see the different MAs, the 1750, 200, the percentage change, where the EMA is, and where the 100-day is. Now, I've asked, again, on my punch list, I have asked Praveen to put a percentage, positive if you're above the moving average, negative if you're below, of how far away are you from the moving averages. The one that some people ask me about, because it's less intuitive, is if you go down to price, CP to CC, that's the one that will put the close to close percent change. The seasonality is here, and you could either come in here before you double click. Let's actually put this one on all year to date, and I'll show you how that one's different. So I double click, and then that should be, let's see. So there's a fourth one. And so it's interesting. So this one said if you started on January 1st or 2nd, as the case may be, because markets closed on the 1st, here is where the projected seasonality for the year would be. So we're trading just a little bit below that. I'd rather just know where it's supposed to go tomorrow. So I'm going to take off that last seasonality, and I'm going to do that by okay. The rest of it's pretty standard. Remember, if you highlight, all the things light up. I find that extremely useful because I can see where the moving averages are, and I can see my volume, my OBV. What else? The purple is the 100. I thought it was interesting. We came down here in November. We bounced here in February, and we just came back down here. So, I mean, I've gone a long time since I've had 100-day moving averages that were meaningful, and maybe this is just one little aberration. If you forget which seasonality is which, so the green is the 10, this color is the 5, and then this is the all-time. You just highlight them. It tells you in the little flag. Down here, volume, we're supposed to have a moving average volume that we're coming. The dots, I think everybody knows, and you won't see both. Let me just move to another thing for here. You don't see on this one, I didn't bother with the relative strength versus the spider, so I will go back to the layout and talk about that. But I really, when it comes to indexes, to me, it's what the shape looks like, the trend, and where am I on support and resistance. I don't really care much about the stuff down here, to be honest. I care about the chart and the price and volume bars. If I go back just for a second, and this is, well, I'll get to the JS layout eventually. I'll do it then. So, and I like the VIX. I still think something's fishy. I don't mean fishy bad with the program, but why is the VIX going up a trend line and why is seasonality strong? That's to me is a worry sign in the market. You know, seasonality maybe I pay less attention to, but we're not coming down to resting. So even with a really good day in the market Friday, look at where we are in seasonality on VIX. And that's bothersome. The dollar right now is meaningless, I think. It's so far off its highs. So nothing else here. Again, you want to update during the day. We bring in the data close to real time. We don't stream it. And if I streamed it, then you'd have to pay extra for data and have to be pro or non-pro. And we buy an enterprise data, and as long as we're not streaming it, I guess that's how the rules work. Commodities are just like the indexes. Same thing. Um, you could add seasonality. Again, I have no idea if seasonality is meaningful. Let me show you some new things that we put in. Um, if you want to see how much prices change from one area to another, it tells you price change. If you want to know how many days are there, you want to measure a day period, that is measured from day to day. If you wanted to measure, again, I don't ever use it, but if I wanted to measure from here to here, it's how many days. Again, I don't ever use that, but I do use this tool here, which combines the two. And if I touch where I want to start with, and then I take my finger off the mouse and then click it where I want to finish. So there you had 3 days and a 21% drop in gold. So those are new tools. Um, again, I haven't used it yet. But we have Fibonacci's if you want to look at various retracement levels. And we also have, I think that's extensions. I don't use them very often. As you could tell, I'm not sure what that button is. Retracements, and this is extensions. So we have fibs built in as well. What else is there to show you that's new? The drawing tools are here. Right now, I had him move the fundamentals up to the left-hand side. You won't see fundamentals on gold. Why do I have him move it? Because I'd rather look at this part of the chart. I don't really care about this side. One of the things that I caused a problem is my news is right above fundamentals. So I've asked Praveen to move the news lower so that I can have both the news and the fundamentals open. It'll clutter up the left-hand side of the chart, but I read charts on the right-hand side. And that's about it on this. I can show you, remember, any lines you could do like any other program. You can change color, you can change what the lines look like. I still must have highlighted that the extension tool. All right, why aren't you going away? Oh, well, I'll figure that out later. What else is up here? John likes green and red candles. I like white and red. We're going to give you a toggle switch at some point. I don't think it's in yet. Um, I don't think it really matters. If this was a white background, I'd have green. Just remember on my candles, open candle means you closed higher than you opened. A solid candle means you closed below where you opened. A white candle means you were up on the day. And a red candle means you were down on the day. Now I got to figure out how to get rid of this thing. Well, so I'll worry about that later. Again, if you have questions, type them in. The buckets are self-explanatory. The gray is yesterday. The red or the green is today. The white is the ones below. We should probably change to yellow, maybe. the ones above, so it makes it even easier. And what we're looking for is we're looking for something that doesn't look like a bell-shaped curve at all. We're looking for massive buildup below or above, and except for that, it is what it is. Ian has a 3 or 4 bucket skipping, but that's really on where the index is and how many buckets it moved from one day to the other. I'm probably going to incorporate that as a thermometer just to give you an idea of how many buckets skipping by the index. But this is obviously a neutral. And one of the things I love in all the different layouts, you'll see a calendar. And I can take that calendar and go back to February of 25. Actually not February, April 25, and go to April 7th, because that's when the low was. Remember, if I set it, I have to still hit the reset. And give it a second to calculate. This is one that takes time. And you could see why April 7th, it was so obvious that we had either a reversal on that date or a reversal coming. So I think this calendar tool is really helpful. You can actually go back and set a lot of these and look at different things in the past to test out ideas and see how things are doing. The reason why it takes a second to load is because it's got to go into 4 indices and think how big the NYSE and the NASDAQ are. And it's got to look at percent B across probably 6,000 combined instruments, and it takes a few minutes to put everybody in their column. Market breadth. I think this is a very important piece of the program and one that I'm pretty proud of. I think I can put more in it, and so I'm actually working on a new market breadth tool, but I'm not ready with it yet. I'm just playing around. I'm not shy when it comes to learning new things. And as I learn new things from different people, unless it's a proprietary tool, I'm going to put it in the program. And so, the 13-week new high, new low is something I've used for a long time. And I think it's important enough it's in the market breadth tool, but it only matters at an extreme. So let's look at an extreme day. Let's go back to April 7th. And so you could either program it so that you had your date you picked here. We've decided to put the date you chose in the center so that you can look at what happened after the event. And I think you learn a lot. I learn a lot from going back and reviewing. So what happened on this day of April 7th that made me be obnoxious more than normal? You start at the top. We're in a pretty profound downtrend. We got daily and weekly bongos are red. I can't go point or I'll lose all the little windows. The high jump is at minus 100. If you look to the left, you had that little pullback that went below the 200 that you also hit 100 on. If that was flipped around and you had that pullback on the right, it would not have been the lowest to the left, but that was the prior low. So we had a pretty big pullback here at minus 100. If you look at the moving averages and you look at how many stocks are above the various moving averages, and then you go down, you look at the new high, new lows are very red. The advanced decliner is very red. The up-down volume is very red. And then you look even below that, and you can see you have a bingo, so baby out with the bathwater. And oh, by the way, make sure on the same day, look at your 13-week new high, new low. And look at the NASDAQ. On this day, you were 0.00 and 0.01. This one can have a short bounce and retest, but it doesn't stick around for days when it gets like that. So this was an obvious low to me. And, people think wow, how did you know that? That's because of Ian's tools, dang it. I mean, yeah, the 13-week high low isn't his, but the high jump, he looked at the high. I'll take a little credit. I'm the one that started looking at the same tool to the low. Ian never talked about the low jump. The bingo is certainly something from Ian. And then, having a Phoenix at a low, which by the way was a higher low than the low I said was the low of the market. But having a Phoenix after a sell off is exuberance, irrational exuberance to the downside. And then the next day, we had a Eureka and a major reversal higher. It doesn't get any better to me in finding a bottom. And you can barely see it. You can see it better here. Um, when Praveen was coding the Hindenburg, he took it on his own. He said, I'm going to find a reverse Hindenburg signal. And we just named it the defibrillator. No other product in the world even it has it because we made it up and we haven't published what's in it. And the defibrillator fell on the same day. And it's all different things. It's the Eurekas and the Phoenixes are arms, new high, new lows, advances, volume of advances and decliners. The bingo, the fib, all firing, telling you it's a low. The high-low jump's got nothing to do with new highs and new lows, and neither does the 13-week new high, new low. It doesn't. It's not the same tools over and over again. So you've got multiple different tools, and I think that how many other programs have this? And then don't forget the bangos. I probably didn't, I must have slept during those parts of Ian's talks because they didn't resonate as much with me. Um, but the bangos are the opposite of the bingo and their exuberance to the upside. And you can get a lot of exuberance before you're done going higher. So I think that this series of windows, and look at what the new highs and new lows did. Um, the number of stocks above the moving averages just cratered here as we got to the lows. Y'all got to do this yourself. There's no reason why we can't do this ourselves. This here, forgot, as a new thing. I asked Praveen to code in two additional things. One was the Zweig thrust. A lot of people call that out on Twitter and other places as it's time to go back in the market. And then the other thing, which we haven't completed yet, is a IBD type follow through day, which we're going to have very soon as well. So we have a constellation of breath tools that nobody else has. And I can say that confidently because nobody else has the defibrillator. And if there are tools that you think are magic tools, again, that are not proprietary, that we can sort out with math to code them, tell us what they are, we'll put them in the program as well. So I think this tool is phenomenal. And the only complaints I have, and they're soft complaints, are one, it doesn't update during the day, and it's because it doesn't necessarily make sense on some of these things to update during the day. Price and volume update. And then the other thing is the weekly. And I do have some, HTSI does have weekly Hindenburgs and things like that. You can put on a weekly chart. I don't know if they're all validated at all. So not having the weekly is probably no big deal. I am finding that the Hindenburgs sometimes come in late. And by that, I mean, we're getting constant updates of the data, and it may be that the final of the NYSE and the final of the value of the NYSE and the final of the new highs and new lows may be something that they release later and they keep correcting. But by 8 o'clock, it's in. By 7 o'clock, it should be in. Sometimes we have a data issue, and I call up Praveen and he reruns the ingestion and it fixes. So I think this is an incredibly valuable page, and I hope you guys like it as well. Ratio charts, I love these things because it's not, all you got to do is look, where's your leadership right now? And this will update during the day. Materials, energy, and industrials. And then you got the defensive 3-pack or 4-pack of staples and utilities and real estate that were strong that have eased a little bit of late. Healthcare, which is neutral, it's the fourth of the defensive plays. And what's not performing now? Technology, although it did okay on Friday, discretionary, and banks, or at least financials, which is more than just banks. I mean, I think there's a lot of value. I don't put indicators on this. I don't do anything else. I like the line charts, and I include Bitcoin because even though it's not a S&P 500 sector, it is I think it's important. And I do think it does impact either derivatives like MicroStrategy and probably impacts XLK as well. So I like having Bitcoin there. I don't talk about seasonality too much. And I got to admit, um, I'm a little bit less enthusiastic about seasonality than I was 10 years ago. And I don't know if it's a natural effect over time that these things get diluted out. Everybody knows them already. Some of the great stories are no longer around anymore, but I'm not sure I'm as fixated on seasonality as I used to be. I do love the fact that we can plot for you various periods of seasonality predictions. Like, here's Netflix. Well, every time frame goes up the next couple of days. Well, that might give you a little bit of conviction if you were looking to buy. If you were looking to buy Netflix on where that green dash is, and you saw that seasonality goes down the next few days, that's probably useful information. But buying stocks purely because of seasonality, and maybe I hope to become less disheartened about it. But one thing I like to do is let's look for next month. So let's go out to March. Click this, and it takes a while. And I don't want to click off it because sometimes I think if I click off it, it stops thinking. And so what it's going to do, it's going to look at every stock in the data set, and it's going to look at performance at multiple different time frames, and it's going to look for how many times and when do we have a hit rate of 80%. That means 80% of the time it goes in the direction it picks. Average percent change is 7%, so it had to move at least 7%. And we're going to look at it in a lot of time frames. And it takes a while to run, so I'm going to cross my fingers and I'm going to move forward and see if we come back and we have any data. If not, I'll do something that doesn't take as much time. Financials, I don't worry about financials. Everything I need to know is in the JES layout. But if I actually cared about financials, and I know some of you do, I would type in my ticker and I can look at annual, quarterlies, and trailing 12-month data. And if you care about fundamentals, they're there for you. Checking back, still nothing. All right. And I haven't done JS layout, so it's not the end of my conversation. That's the end, I believe, of the standard layouts. I have shared this number, and I'll put it in the chat again. If you want this layout, Praveen's done some really remarkable things. Look, this isn't a free program and it's not cheap. I think it is when you compare it to things that I use, but I probably have more knowledge of that because my desktop has a lot of programs on it. But Praveen has done, when you consider this as Praveen by himself and me, it's a lot of stuff we've been able to build. Praveen's a genius. This is the new layout creation tool, but I'm not really looking at it right now because of the create a new layout. I'm looking at it because if I have a layout here that I want to share with you, and this is called market breadth, new high, new low, 13-week. I highlight it and a number pops here. If I take that number and I copy it, I just pasted it in the chat box. If you were to take that number and put it right here, it doesn't look, I think I have to type it in. 320 342 635 and hit copy shared, which I really don't want to do, but I bet I'm going to pop up another window here. Now, how cool is that? And I close this and I go to my window and guess what I got? I don't know. I mean, Thinkorswim has a great tool for copying layouts and charts, so I don't want to diss them at all. They got a whole lot more programmers than Praveen, and I think that that was great. And the settings doesn't work yet; it's coming soon. So I'm going to kill that because I don't want to. Everything loads every time you start it, and it takes a little time. So I'm going to delete that layout. And I've learned it takes a second or two to delete it, and it's gone. So that is, to me, is a great tool. If, for example, you want to make your own version of my layout, do the copy. Go into new layout. There's your number. Create the new version of that, and then rename it. And you rename it by highlighting what you want and type in what the new name is, and then it'll change the name. And then you go and work on that one, not the original. So what else do I want to show you on here? So that's pretty much that. And I've just got here new high, new lows, stocks above the moving averages, AD lines, and the RSI. Again, I'm playing around trying to decide if there's anything else that passes my muster to get added to the main market brief, not market brief, the main market breadth tool. The 21-day or 13-week new high, new low made it. Those that were at the live meeting in Orange County or paid attention online, there was a 5-day new high, new low, which is the FOMO indicator that Matt Caruso talked about at the meeting. And I don't put it there, but I might want to put it on my charts. It just slows things down a lot because it calculates the 5-day moving average for everything in the index. And but basically he talked about, in an uptrend, why do you see these little pullbacks? And he pretty much mapped out that you get little extensions in that 5-day new high, new low, and then stocks pull back a little bit, and then they run up again, they pull back a little bit, and he can tie those pullbacks to the 5-day new high, new low. I created some new layouts, which I don't know if people have. One of them was, the ratio charts are great, but maybe I want to look at the regular symbol and not just a ratio chart. So I created a box here of 12, and I'm going to expand that. And I combined sort of the JS layout, some of the dots and the relative strength. This is the buy sell line, the bongo, and then on moving averages, I have the 21-day exponential in purple, the 30 period WMA in yellow, and then in white, I think, is the 50-day SMA. One thing that has become apparent to me, and I've mentioned it a number of times, is if I added the 17-day simple, it would be in the same range as the 21E and the 30W. Yes, there are differences in the three, but for my business, I think it's pick your poison. They're all about the same. So the 17-day simple that Ian used is a super strong overlap of the 21-day EMA that Mike Webster and a lot of the IBD folks use. So I quickly go through each sector. Again, Bitcoin isn't a sector, but it's important in the market, so I look at it. Weak. This is technology, weak. Not horrible, but weak. Discretionary, weak. Whoops. Um, Communications, trying. And this is strength, industrial strong. So not only is the ratio chart strong, so is industrials as a regular stuff. And then you can look at financials, weak. And when I say it's weak, well, I'll wait for a weak one. Energy, it's above all the moving averages. It's in a buy. High-low jump is not excessive. And I'll go through those each night. And again, I don't know if I gave anybody this one, but I'll put it in there. Real estate, and then utilities, staples, healthcare. So healthcare, I would put in the neutral category. I think financials was the other one. Look, it's in a buy signal and it's above the moving averages. It's not horrible, but there's no momentum to it. And one of the ones that was weak, let's see. This is a weak one. No, still financials. If you're below the moving averages, in a sell signal, so the other one wasn't financials, I call that weak. I also threw in, because I had extra space, I threw in a couple others. I threw in for reasons I don't know, this bar up here moves every time you switch. And I think, I don't know if something is changing. It's got to be the name is longer or shorter. And so it messes me up. I'm going to ask Praveen to see if there's a way to fix it at one size so it doesn't change every time I change. All right. Come on, give me the ones I want already. Yeah, I'm almost there. Oh, all right. So it's not, all right, wrong. All right. So that is just the sectors. So if anybody wanted that, just let me know. I'll give you the number. And then I said, it takes too long for me to type in each of the FANG stocks. So why don't we create something of the max? So the same layout applied to stocks. So I call it my key stock layout. And again, I'm all about wanting the speed. And I'll share in a second so I can open this up. And I think this, frankly, is really helpful because these really are important plays. I started buying Amazon down here. This is a high close doji. So I bought Amazon the next morning. It's not up here where I'd rather be buying it, but I wanted to have some. I talked about it online. Apple, I'd rather get above the moving averages, but it's holding up better than most. I said we're better this week than the last weekend. Google, is it done going down? I like to see it above the yellow line, but it looks, I might be nibbling. Meta, man, what a disappointment. Rallied on earnings and sold off with everybody else's. Like everybody else, is it getting ready to be exciting? Netflix, if somebody comes out and says the government's not going to let you buy Warner Brothers, the stock's going to go back up to here. But until they're done with this shenanigans with Warner Brothers and Paramount, I'm not sure that Netflix is going to do anything. Tesla, like the others, it's not that far away from being interesting. Nvidia, this is this week's earnings, so I put that green box on because in my mind it wasn't going to go anywhere till earnings came out, and I think that's probably true still. So I'm looking for it to break out of the box. And I own Nvidia. You probably all own Nvidia. I own a lot of Nvidia. I've sold some calls up at 230 because there was actually premium in them against it, but I don't know. I think Nvidia is going to be just fine. All those capex dollars, where are they going? Microsoft, this is the one that is troublesome. There's no proof of life in this thing. Eventually, I think people are going to start buying it because it's a value stock, but there's nothing there right now, in my opinion. And then I go to my favorite ETFs, Labu. I keep thinking this is done, but it refuses to die. And yes, it's below the moving averages. So, but look at the hammer or the bottoming tail that we saw here. It's right below the moving averages. Maybe biotech's not dead. Pharma, and again, what am I? I'm a doc. What do I like to follow? Biotech and pharma, hence why they're in here. Flagging on pharma. Now, in my world, where cancer doctors, the vast majority of their income is the margin on drugs, and um, which is bizarre. As a physician, you make money by being the pharmacist, but in reality, they're underpaid on the services side, and so no one ever has changed the system. Um, so we pay very much attention to drug prices because in the infinite wisdom of Congress, they set drug payments at a percentage of cost. And so that tells you to use more expensive drugs, which how stupid is that, but very predictable. So Trump's put drug pricing as a big target, and it really looks like it's only going to affect a few drugs a year and then new drugs that come to market. And the few drugs a year it affects are drugs that have been out a while. So pharma, it wins because their current gravy train sticks around, and biotech loses because they're the ones that are developing new drugs so that they get acquired by big pharma when they get positive data. And then big pharma values them based upon peak sales. And if you don't have pricing power, you don't get bought by as much. So every time there's any drum rumbling of drums or whatever it's called in Washington on drug prices, it hurts biotech more than pharma. If we look at data centers, I mean, this is where everything has been of late. ETF also pulled back, but data centers, I mean, we drew this line and talked about data centers and all the components of data centers, whether they're energy, utilities, um, optical cable, memory, storage, electrical components, flow because you got to water cool all these terminals, air conditioning companies, fix. It's not up because of housing. It's up because of data centers. There's so many out there. Nuclear, there are so many crazy things out there, all because of data centers. And now imagine what you say when they want to build a data center in your backyard. You fight it. And that's what we're seeing in Florida. But I think data centers aren't going anywhere. That's part of that capex spending. And then Trump. with what's going on in with Iran, no shocker to see defense going. And how many of you took this trade? I mean, remember HWM, double momentum, breaking above the 50 at about $198. It's at 260. And I mean, this is a trade I took. This is one where I let my options expire and put the money in the bank. I probably should have stayed in it, but I don't trust this market, and I had a lot of profit dollars in it. That was a good one. But defense starting to look good again. So let me put these two in the box, and then we're going to go look at the JAS layout. So again, I'm going to go to new layout. I'm going to look at sector timing non-ratio. There's a shared ID, copy. I'm going to put it in the chat box. All right, that would be sector timing. And then the other one is the key stock timing. So you can create the same. I mean, that to me is so cool that I can share that just by giving you the number. All right, the rest of these are not ready for prime time. Um, they are things that I'm playing with that I don't use on a daily basis. Let's go to the last, and the one we'll spend the rest of the time on is the JAS layout. This thing keeps getting better and better, so I want to show you some of the additions that you might find useful. Um, let's see, where do I want to start? Let's start over here. I have a number of user groups. These have all been populated for this week coming up. And it's where I spend a lot of time. You notice some are green and some are red. Well, we had a pretty okay week, had a good Friday. Therefore, no shocker, the majority of the contra ETFs are red. So you will see the color of your watch list just tells you where they average up or down. That's one thing. Second thing is these have been changed a little bit. This one here, let's look at John Person's weekly high close dojis. And these are weekly high close dojis. And where do I get them? I scan them in TradeStation and I import them here. And let's just look at one that's not a buyout. Get gold. Now let's go to a weekly chart. So a high close doji in John's world, this is John's stuff, not my stuff. And I don't count this as a high close doji, by the way, because it's, to me, the real valuable high close doji occurs when something's in a downtrend. So let's look, right? This to me is a valuable candle right here. Why? Because gold was in a downtrend. It had a doji. And then John has rules about within how many days do you close above the high of that day? Well, you did the next day. So that becomes a high close doji, which is a very bullish candle. And then he has rules about it's going to have a move in so many days. But to me, the key and the hardest thing to filter is you got to be in a downtrend when you fire the high close doji for it to be as meaningful. And obviously, this was a good trade, and gold's a lot higher. So the TradeStation doesn't filter out whether you're at a high or a low. So I don't consider that a high close doji, but I know why it's here because the close here is above the high of the doji bar. You can get high close dojis on daily, weekly, or monthly. It's when you get it on the next time frame that it's more valuable. So I much rather see it on a weekly and then find the fresh buy signal on a daily. But I look at every one of the high close dojis individually and the low close dojis every weekend on the weekly charts. And a weekly signal only occurs on a closed weekly bar. But out of curiosity, what do these look like if I was to plot them? So in any user list, if I hit this button here, it shows you what the performance is of this list of stocks. Now, if I look at my list of stocks that made it to the bear watch list, which is not a short watch list, it's just a big watch list of stocks that's on somebody's bear list. There's a few red things in there. It doesn't look like that. And if I look at the stocks that I thought were potential shorts, I want it to be breaking down, and it's breaking down. So I find it useful to look at that. If I was to develop a scan, imagine that. And I don't know how many of you actually have been using this scan or copied it or anything, but when we did the January mentoring, we created a scan on the fly by opening these up and then setting parameters for several of these. I'll share that with you in a second. Not an easy share. And then I called it, we called it the webinar for January 31st. It's now become one of my go-tos. And I called it now my rockets in flight. So we take the 3,000 stocks in the database, not 3,000, it's 3,800 past the filters of $1 and 100,000. And we looked at them with this filter. I've got 265. And look at what this filter gives you. Considering the current market, does your portfolio look like this? Mine does not. All right. I can show you what my portfolio looks like right now. And again, you can't glean too much for this because I take off the filter. There are options and some are they're all over the place, but I would hope it's heading higher or else I'm in trouble. That's my positions right now. It actually looks pretty good, except it's flagging. The other one's still going higher. So I think this is pretty cool that if you think you've created something that's good, you can take a look at it of what the index would be of adding them all together. And then for those that were at my meeting, and I look, those that come to the meetings, those that do it online, I appreciate it. Those that bought the product, I mean, I've said it before, this is not what I do to make money. But sometimes it's good to feel like people actually like what you're doing. And I'm not asking for gratitude on this, but having people come to a live meeting, it does make you feel good. And again, it's not the money. Remember we did the Praveen's index? Doesn't look like that anymore. Now, this is a weekly. Let's go to a daily. Maybe I should have been in daily already. I got to create it again. Remember, and this is really good proof of what Ian used to teach us, which is what was an awesome index of leadership. These stocks don't necessarily lead in the next move, and they haven't. So I think it's a lot of added value there. So I wanted to show you that. One of my favorite things to see if seasonality did anything. All right, I probably have to stay on it, but we'll come back to it. Back in the JS layout, we have this thing called ETFs. It's going to take a second to load. So it's way too big. So I want to show you how I manage it. Take a drink of coffee. My request of Praveen was, I'll back up. I we use, interestingly, I think that one of the same data sources were in Praveen Index. I got to go back to Impulse. Dummy me. And these are ETFs, I think. Yep. We use a financial modeling prep is the data source that we have. And if anybody wants to do this, they're welcome to. Go to Financially Modeling Prep. You can look at pricing, and they probably don't tell you commercial use. Commercial is much more expensive than individual. But you can look at what data that they have. And if they have the data, then we can ultimately put it in the program. And there is the API document, here it is, API documentation goes over all the different data sets they have. So John is going to have 413F in his, where he's going to have it set. So he'll be able to link certain stocks to what funds are adding or subtracting. I think that's really brilliant. That was a great idea. Anything that's in the financial statements, we can capture and import it. And so if you wanted to go there and look and see if there's things that you liked, and I found things that I liked, insider trading, there's so much here. So that's our data. This is our data source. And pretty much if it's in their API, we can bring it into the program. So you want to look at that, that might be cool. So we have 4,019 ETFs. First thing I do is I go up here and I'm going to put a volume minimum on it. If it doesn't trade 500,000 shares, I don't care. Now I'm down to 600 ETFs, much more manageable. And let's say that I showed you that industrials were working well right now. And you were curious, what's an XLI? So you can go here and you hit this tool here, which says split. And then once you've hit the split, you touch what you want to look at. And it takes a second, but it's going to go into the data source and populate it with what are the holdings in XLI. Maybe you're interested in data centers. And why would I do this instead of going into DCTR, instead of just going into the industry group? Well, we'll go look at data centers. Am I forgetting what it is? It is DTCR maybe. Oh, unless here it is. So we look at data centers. That's not data centers. There's data centers. We got AMD, which is a semiconductor play. We got AMT, American Tower Corporation. Why are they important? Communications, unique communications, connectivity. APLD components, Broadcom, they're making the chips. CCI, Crown Castle. Are these the guys that do signs? They have right of way if you're laying down cable. Digital Realty Trust, somebody's going to own the data centers and lease them to the people that use them. Equix. If you don't know what it is, it's real estate. You highlight the name. Digital Infrastructure Company, enabling digital leaders to harness a trusted platform to bring together, interconnect the infrastructure that powers their success, aka data centers. GDS. What do they? I don't know what they do. They're in the data center ETF. You can go back here. Develops and operates data centers in China. Oh yeah, I just made a lot of money on one of those. So you can go down the list. It's not just semiconductors. So the ability to look at what's inside an ETF is valuable. Now I thought when I bought this that this was something to do in TV world, and I bought it, and I'll show you maybe one of these days how I managed it because I'm very proud of how I managed this stock and another one I'll show you that have been very tough. So I bought VNet on this breakout, and I bought in the money calls. I think I bought $10 calls, and it ran up to 50, to over 14, almost 15. And what I did when it hit 14, because I didn't trust it, and sometimes you're just lucky, is I bought a $14 put and sold a $15 call. And why did I do it? Because I had a lot of those calls. And then the thing dropped. But I just bought it because it broke out. I didn't realize, oh, yeah, there's other reasons too. You can see I got called to it here. When I saw the dots, the relative strength, the OBV, the breakout of the trend line, and I bought it at the open the next day. Um, but I think it's helpful here to know what other things besides chips are in this. I mean, I recently got into Micron, SanDisk, and Seagate because I'm one of these guys that wasn't in them and it was pissing me off. And I don't know how to buy things that are doing this, but I bought it on the drop. I didn't buy it at the low, and then I was negative, and then boom, turned positive this week. But I think knowing what's in the ETF is very useful. And what's really interesting, go back to the base, we got a reverse function. If you're in a stock and you're curious, what are other stocks that might be like mine? So I clicked on AMAT, and what does this consider to be its peers? So if you were creating your own ETF, perhaps this is showing you its peers. So that's this split function. I think that's really cool, especially in the ETFs. I showed you these things already. Let me do this for you. I don't know how to share this without except showing you and show you what I did. So this to me is if I want to make my life easy now on the weekend, I am running this filter, and then I am going through every stock in this list. It's 265 winners, and I'm finding the best things. And if you just look at what's in this list, some of them are already moving. Okay. Applied Materials, this one, it's broken out, but it's ugly. Little stock, nice smooth. APA. I want things that would be under consideration for leaders. This one might be getting breakout. And you're finding a lot of stocks because what have I learned in my little endeavor with my tool set? I have learned that I want to let me find one that's perfect. Let's look back here. Perfect buy opportunity. And we looked at it because we drew the line. We're probably looking at that buy opportunity here, but this was the perfect one. What can I learn from this? All right, I look above and I see on this perfect buy opportunity day, my daily and weekly bongos are both bullish, but because of the pullback, the daily has just reversed from bearish to bullish. Check one. Check two. My high-low jump is not high. It's 31%. I don't think I put that in my filter. Maybe I should have. I can now add into the filter that I've just crossed over a moving average. I didn't, but I might try and fine tune this one. And then down here, I put in something along the lines that of my dots. So the 4 dots and CPR, I want at least one bullish dot. I don't want any bearish dots. I didn't require a squeeze. That might find even better ones. But I did require that the relative strength versus the spider is above the moving average, and so is OBV. So let's pull this up. Two ways to look at it. Let's do it. All right, here's what I want to do. Please write this down. Here are the ingredients of rockets in flight. Just don't know if I can send you a picture. I'm going to take a picture of it anyways. If I remember, I'll stick it in. Oh, I can't take a picture when I'm in a picture. I'm already recording this. Bongo up. Weekly bongo up, at least is positive. Daily bongo up is positive. Age of the weekly bongo, or the daily bongo rather, is less than or equal to 9, meaning it switched within the last 9 bars. I probably would have set it as 1, not as 0. So let me do this. Up is greater than or equal to 1. Down is 0, meaning you have no down impulses. Last price for me greater than or equal to 5. You can pick whatever you want. Last price is greater than or equal to the SMA 200. Yes. Volume is greater than or equal to 500,000. Pick whatever is your poison. OBV, just the ratio of OBV to the moving average, is greater than or equal to 1. Relative strength is above, and weekly is above. That weekly may be too tight to be above. I don't know. And I just changed this from where it was at because I just made it, I required at least 1 dot. Hit OK. And now I can test, is this better really quickly by going here and looking at it. It's better. So I took away things that may have pulled back and are not giving an actionable signal. So think about it. Let's go back to that CBOE. In fact, let's go, where was CBOE? See, CBOE isn't giving us a signal right now because it's already running. So what I would want, oh, why did you do that? Hold on, let me figure this out for a second. I guess I have to come out of, all right, before I had to click something to come out of that. Now I'm going to put CBOE on it. We want to be buying this. It may not fire there because of the EMS. But let's, January 7th and 8th, let's go look at it. So I hit the calendar. I'm going to change the date to January 7th. I'm going to hit the reset. And it's going to show me the things that hit on the 7th. And there is CBOE. Where is the date it hit? That's the date. CBLO, my bad. It fired on the scan on the day that I would have wanted to buy it. How good is that? It would have been better if it fired the day before. I don't think it did. but let's look at the day before. On January 6th, we had a ton of things fired and no CBOE. If we take the stocks that fired on January 6th, were they good stocks? Now remember, we're not buying these and holding them. I'm asking the question, as a group, did these stocks trade up for the next couple of days? They traded up and they're still trending higher, although they got their big bump right away. All right. Um, I think this is a really cool tool. You can go back and you can back test anything you want to do with this tool. So I'm just going to go back to the 7th again. You pick your day. It resets the data on that date. There are 147 stocks, and on that date, the 147 stocks were breaking out. Again, it hasn't done it. It hasn't stayed doing well. We've been in a choppy market. Maybe I'm not surprised. It hasn't broken down. That's for sure. And you can go and you can test the stocks that fired that day. You can do this too. Let's just say, let's make a new list. Click that little box up there. JAS Rocket Light 1.07.2026. And then let's hit enter, close this up. And now I should be able to take this list here and move it over here. We had a bug, but I've been told it's fixed. Let's see. Trying to remember if I have to. All right, I guess he's still working on it. Let me go back to the impulse because I think when I've got that line going there, if I'm try this again. Well, the intent is so that when you click it, the stocks are going to end up here. It did work for me here, and I thought it was fixed. I'll get Praveen, make sure that copy to this is fixed. There are different ways that you can move it. For example, if that copy to didn't work, I should be able to all right, got them all highlighted, and this allows me to save a file. Okay, if I wanted to do that, one of these should allow me, it may not be in the production version. Yeah, he was going to create a vehicle. Oh, it's because I'm creating the filter. Maybe that's the problem. So let's turn that down. All right, well, it's supposed to be able to copy over, so I'll make sure we get that fixed. Because once you copy it over, it's going to stay in place. So you can come back and test. So this is what I ran on the 14th. And if you wanted to see how they've done, this is a list that I created a week ago, still heading higher. So I think so I just changed this filter, but I went through the parameters. What are my objectives and my goals with that filtering? I want to show you something else that I think is cool. If I right click in the columns, I have one that says show column chooser. It's down here. There are a lot of different signals that I can look for when I set the filters, I could have looked for, let's just, we're gonna, well, I'm not gonna do it live, but I'm gonna, you can look for prices crossing up above the 50 or 75. You look at EMS, you can look at EMS is turning positive. There are a number of different other things that you can do. And we're going to have sector, industry group, and others in here so you can make, hold on a second, I wasn't paying attention and my other monitor turned off. There we go, still back on. So we're going to add it so you can start doing customized at sectors. It might be we can put in ETFs and different things trying to do that. So I'm pretty excited about our ability to filter and hope you guys will like it as well. So if you're going to go and do your own filter, you're going to come up here. Well, first thing you're going to do, let me go into my scan creator. And what you might want to do is again, it's up to you. You might want to come in here and go to the column chooser and maybe add whatever columns you want in here. Okay. And then crosses and things like that. All right. So this one here would be SMA 50 cross up means price just crossed up above the 50. So if I was looking for stocks at free parking, I might look at cross above the 50. I might look for stocks that are SMA 50 support, which means I'm within 2% of the 50-day moving average. Again, additional ways to filter. So let's see if this will, when you click this one right here, the flower, show filters. And then for all these filters, if you just come in here last, I want greater than or equal to, and you can put your price. You want up, same thing. You come down here. I want greater than or equal to how many ups, how many downs. Maybe I want FM5 to be above a certain amount. I don't. I'm just making crap up. But you could put in how we created that filter was basically I went through the ones that I thought was important. Volume, OBV, relative strength, weekly relative strength, bongos and age and the number of dots, price and volume. And that's how I created the filter. When you create your filter, then you save your filter and then your filter will be available for you. All right. So I think that handles that. Now, what I could do is bums me out that that did not copy. It really does. Because that was one of our goals was to have that fixed. Let me just one more time play with it. Go to my rockets in flight. Hit OK. Now I'm going to filter buying things that just crossed up above the 50 and see if these have any value. Just a couple. Let's look at them. AAT. They may not have any value. Kava looks interesting. Now, I've got to talk with Praveen. Oh, wait, what date am I on? No, we should be on today. I'm not sure that this is really, there must be a code issue. It should be looking for crosses today or within the last 2 days. So I have to go back and pull that. These have all crossed above. This one's sitting on the 50 and broke out. So again, I haven't tested all these to see if they add to the strength of the filter or not. But my point is that you can start adding and subtracting some of these sub filters that we did. So that's anything else over here I wanted to show you. When I created a lot of user lists. Let's just go over this one, these things. If you want to refresh your data for symbols, you click on that. This one is delete selected rows. So if you have some you want to remove from the list. This one here, import from files. So I have files I created. I'll just take one of my files. And I love Dropbox. Dropbox is what I use for storage and finding things. So let's just look at my buy watch. See, this is going to bring over because I saw that it started moving. All right, and then I could do whatever I want with it. This here, copy to clipboard. So if I wanted to paste these somewhere else, I could highlight them, copy to clipboard, and technically I could find something empty. And then this one is copy, and this one's paste. And I can paste them into another user list. So you don't have to remember what any of these are. All you have to do is hover over them, and if your mouse blocks it, then your mouse pointer. Samir, if you don't have all the icons I have, and again, I was told by Praveen that he updated everybody to 23. You have to go into updates and downloads in the Windows Store, and again, and I get my own versions, which are no different than yours, except I try. All right, you're up to 25. So if you have 25, you should have all the icons. So go into the Windows Store and check for updates. My computer updates them automatically, but it's probably a setting. And Praveen is here, and he just said it's update 25. And mine updated on the 13th. And I think I got 25 before anybody else did. Last updated date was the 20th, but I was already there. So he updated it on the 20th, which would have been Friday. And I already had the installed version, which is 25. All right, so I beat this up a lot. I don't know if Praveen, if you noticed that the copying wasn't working off of the, just try it again with you here, it might work. Let me clear this one. Actually, that's not the one. Yep. Let me go back to the impulse. Let me, all right, let's go, whoops. Let us change the date to the 7th of January. And let us drop in my magic filter. And let's highlight them all. And let us copy them to here. See, now it's going to work because Praveen's here. You see the lines run across there. Now I'm going to go over here. And it's populated. Figures, huh? All right. Okay. So it does work. So Praveen, I'm not sure how long you've been here. I was playing around with some of our, so now I'm in that list. I can kill the filter. It's going to look at these all based upon today now, but these are stocks that we would have picked on January 7th. And we could see how they did. You know, and some did better than others. I mean, we know the market's been choppy. We know as a whole, the group has started to level off. When I wanted to do this, Praveen, I went down there and I said, cross up through the 50. Now, my expectation is that that should be today or yesterday at the latest. And here's one. Here's the 50. It's not crossed up. And I don't think this is looking back because let me make sure, yeah, there's no date here. So we're going to have to go through some of these modifiers here and make sure that they're actually working right because I want to start putting them in the filters. And it may be I just hit one that wasn't right, but something's screwy there. This is what I mean by a cross through the 50, but it should only be looking today. It shouldn't be looking at 2 weeks back. All right, what else do I want to show? Any questions on this, on the scanning part? I think the true heart of the program is the scanning part. All right. Just to remind everybody, up here, you can do a minute chart. I don't know why you want to. You may have to do a little bit of formatting, but we do have minute charts. Like I said, I don't know why you'd want to. You want it to be 5 minutes, change that to a 5, hit enter. You want it to be an hour chart, change it to a 60. Hit enter. You want to go back to a daily chart, please remember that you don't want to be a 60-day. Go back here, change that to 1, hit enter. And we should get it back eventually. All right, I'm probably, oh, it's still, why is it still saying hourly? All right, Praveen, what did I do wrong? Are we off? All right, well, this has worked for me before. Go to the last bar. Okay, so I'll go up here, last bar, there it is. So I lost the chart because we're switching the time and I hit this and it automatically, now we've got it. You want one that looks interesting for Monday? First Interstate Bank Systems. I don't know anything about this stock. I'm not advocating this stock, but we got here as a pullback in an uptrend. We closed right above the 17 and the 50 or at the 17 and the 21. Notice the 17 in green, the 21 in blue. Do they not run together? We worry so much about why one moving average or the other. Nonsense. Seasonality, nothing to write home about. I love the pullback to the 50. In fact, in Praveen, when I look for within the 50, this is what I'm looking for. I didn't look for this intentionally. It just happened to be that way. What else do I want to show you? Praveen, I love this. I love that you moved it over here. Now I got a problem. That covers it up. So what I'm requesting is that you set the news down here. And since I got you now, let me show you another thing that I'm requesting. I don't know if you can do it. Watch what happens in, let's switch to this one. You see the name here? Watch, I'm not going to move my arrowhead. I advance it forward, and my arrowhead's no longer an advance forward because it's changing to match the width of the name. Mike asked to detach windows. Yes, how do we detach the news and the technicals and move to another monitor? I think that would be great. But what I just wanted to show you is that we need to figure out and fix the window size, meaning the window size is the same no matter what goes in it, because I don't want the toolbar to move. I haven't moved, but the toolbar moved because it's changed. So I don't know if that's something we can fix in the platform. Oh no. All right, can you guys still hear me? Because I just lost internet. Type a Y if you can hear me. Okay, my backup worked. I didn't, all right, wow. Uh-oh, all right, things are going crazy here. Okay, all right, so we got that. Well, we're almost near the end if I lose it. We got thunderstorms coming. We're supposed to go from the 80s to the 40s today. And whenever the weather does that, it's always fun. Um, you still hear me? Type another Y. Okay. I can't believe it, but I'll take it. So we got the news. I thought that was a great question, Mike. How do we detach the news, put it on the next monitor so it can be open all the time? I love that idea. The same thing I would say on the technicals. How do we detach them? There's no technicals obviously on a sector. In case you missed my conversation when I talked about it, a lot of people text me, how do I do a ratio chart? So let's do a ratio chart of the RSP to the spiders. So I'm going to type in RSP. I'm going to click on this. I'm going to now do spiders, SPY. Hit enter. And we now got a ratio chart. Just as easy as wealth charts, which was what I wanted it to do. It's pretty cool right here because as we know, when the fangs got sick, this is a weekly chart. Look how strong the equal weights have been versus the spider. I think that's pretty cool. Let's go back to the RSP. You can also see it here that the RSP is going up and separating from the moving average strength versus the spider. What else can we do? Let's say you want to build your own index. You want to put in your index spiders and the Qs. And the diamonds. And so there's your index, kind of looks like they're all rolling over a little bit. So the plus allows you to combine. I wonder if I do this. Try another thing. I don't know how to. I don't know how to do multiple negatives. How about if I did the spider? What happens if I do the spider and I take out? I wish I could take out all the mags. Let's just put in mags. I don't know if that's going to make it happy or sad. You may have to put your pointer into that box here. Yeah, I think I made it not, I don't, let's look at the dailies. Yeah, I don't think it's not taking the individual mags. This is a spider minus APL minus Microsoft. I'm just trying, I've never done this before. What do the spiders look like if I remove Microsoft and Apple? um, how funny is that? So you can create your own type of symbols. That's kind of what I wanted to show you on that. I'd asked Praveen to set us up for ratio charts, and that was what he did. I actually have created a 2x2 window where I actually have minutes, hours, daily, and weekly in it. Again, it's not how I trade. but I know some people do trade that way. And they may want to play around with how many bars are there. That's too many bars, so maybe I'll go to 150 bars. And we probably do it in each window. Sorry about that. I hit something else. So I have created that, so you can create that for yourselves as well if you want to look at multiple time frames. I do think I want to. I'm working on a new JS layout that'll have daily and weekly on it. What else do I want to show you? We talked about these. I think we got most of the stuff covered. And remember, if you want to have a chart that you like, let's go ahead and do this. We're going to call this one, we're going to enter a template name. This is daily chart with season. Now I'm going to save it. We should now see daily chart with season. Now I'm going to go to new layout, and I'm going to create a new layout. Scan and V and W. I'm going to put, this time I'm going to put the list above me. Got the screener. I want two side-by-sides. I want to link them by signal, not interval. I never know if that should be on or off. I'm going to create the layout. Close this. Come on, layout, where are you? All right, so here's my new layout. On the daily, I'm going to make this one a weekly. I'm going to put 150 here. All right, I like that. Now I'm going to go to this gear, and I'm going to click on daily chart with seasonality. Okay, yes. Do you notice it came right over? Again, another really cool thing that Pratish is my sales guy at regular work for being created. And on the weekly chart, I could do something differently if I wanted to. Maybe on the weekly chart, I want to do a combination with seasonality and or I want to do the timing model. Oh, market timing with 21. I'm just playing now, guys. I highlighted the wrong ones. Let me highlight this one and maybe I want to look at the timing model on the long term, and on the daily chart, I'm looking at what the stock is doing. So I'm running out of things to say. Any remaining questions? How many backup lists? Lost on one version. Oh, ha ha ha, John. When I can just tell you what happens to me. I've never lost a list. However, when I update and then I close the program and start the new version, I lose everything. Then I close the new version and open the new version again, and my lists come back and my markings come back. So I only lose the list that first time I open a new version. If you close it and open it again, they might be there. And the comment that when the version changed, I think that's probably it. I have no idea why that happens. Um, they must be stored in the cloud because they're not on your computer. Because when I change computers, I have the same list on the new computer with the same stocks in it. So why don't you test that out while we're sitting here? Any other questions or concerns or comments? All right. Now forget JS layout. Anything about how I trade, the learnings from Ian, the trade that I showed you that you'd like have any questions about. And John, please turn yours off and turn it on and let me know if your stuff came back. Can you guys still hear me? Why am I still here? All right. Well, look, I wanted to get this done. I don't think I said anything bad about anybody. I don't think I used any swear words. So I think I can actually post this and not worry too much. Um, I appreciate you guys. Appreciate you being here on a Sunday. I was going to teach you how to trade today. I was going to teach you more things about the program. So I hope you got some stuff out of it. And I will, just to give you some of my thoughts going forward, I'm probably going to change up the pricing. If you own it, you're in better shape. Don't worry about what, but I'm going to probably offer a monthly option. And the way I'm going to price it is I'm going to look at 3 years worth of ownership. And right now, my sale price is $19.95. So that means over 3 years, if you buy it at the sale price and pay $500 a year for data, you're at 3,000. I'm going to make it so that 3 years is probably going to cost closer to 5,000 on a monthly subscription. Um, and the reason for that is you always get a better deal buying it and then paying for the data than doing it month to month. So you'll never have overpaid. And if I did it at, for example, at 150 times 36, I think that's $5,400 over 3 years. So if you see that come out and you own it and you feel negative because, oh my God, I paid $14.95 or $19.95, I think 3,000, which would be the most anybody has paid for the 3 years, because 1995 is a new price point on the sales. I think that you'd still saved about 50% or more. So just so you're aware of that, and people are listening to that who are scared off by the price. I think 150 a month is going to be a lot more palatable to people. Uh, the, the, so it's okay now then, I hope, John? Who says with the first version update? That probably is. All right. Look, I appreciate you. If anybody doesn't have the tool, there is a sale that ends tonight at midnight. I think you all have it. And the sale price is $19.95. The new list price is $26.95. And we are going to have a monthly option starting soon at $150 a month once I'm certain my Stripe account will not blow up if I do that. All right, on that note, I'm going to say thank you. Appreciate you being here. Hope you got something out of this. And we got a whole list of Praveen things that I wanted to change that we talked about as we went. Most of them are not fixes, they're changes, improvements. And I'll see you guys soon. Thanks, everybody. I'll probably put another video out tonight once the futures come out. I think if the futures are strong, there are a whole lot of stocks out there that look really good, but I'm afraid to be bullish because I just don't know how the market's going to react to the next 15, the net going from 10 to 15% on tariffs. Pat, I could do these every day. I love talking and I love teaching. I love interacting. I'll do one of these at least once a month, and I'll do mentoring every 3 months, which will be the longer ones and the more of the options trading. And you know, if you like this, comment and Top Down Trader. And please, if you like my videos that I put on YouTube, comment and give me an up arrow, because I'm not a marketer, and the only way I'll get distribution is if you guys do it for me by hitting likes and putting in remarks. All right, have a great rest of the weekend, and Go USA. I can't believe we won in hockey. Take care, everybody. Thank you all. Stopping share. And this will be posted.